Well, good afternoon, everyone. And let me say a really big welcome to the CLICO Credit Union Youth Arms, our first of many webinars. And this evening, we have a hot topic for the young professionals here joining us. We're going to speak about building your credit as a young professional. And we are so glad that you are here with us. We are so glad that you registered and you logged on. And thank you for being here with us. My name is Nikolai Rampasad. I am the chairman of the CLICO Credit Union Youth Arm, and it is a pleasure to be your moderator for this evening's proceedings. Joining me is a great panel, a cross-section of persons who have the experience and the institutional knowledge in this particular topic, and I am so privileged to be joined by Mr. Jonathan Alexander, who is the credit manager here at the CLICO Credit Union, Ms. Gabrielle Simon, who is a national youth advocate as well as a member of the CLICO Credit Union Youth Arm, and Ms. Samisha Maharaj, who is the FSS rep at the UE Student Guild and who is a national youth advocate as well as a former national youth parliamentarian. So, ladies, gentlemen, good evening and welcome.
Good evening, good evening.
All right. So, as we prepare to dive into these topics, we just want to touch on a couple housekeeping rules. We understand that this is such a pressing and important topic for our young people, the young professionals with us. So as such, any questions you may have, feel free to post it in the live chat of the comment section. And we have a team dedicated to get those comments, and we will answer as much questions as possible in the question and answer segment to the end of the webinar. Of course, we have we have a great panel assembled, so please feel free to share your questions. Of course, keep it respectful, keep it appropriate, and we'll be sure to touch on them coming to the end in our Q&A segment. So with that said, let me pass it over to my panel. And Jonathan, we're going to start with you. If you give us a brief introduction, what do you do at the credit union and your expertise and knowledge in this particular area?
Yes, so good evening to you, Nikolai, panelists, as well as to our viewers. Again, I must commend the Youth Arm for engaging in such an activity. Jonathan Alexander is the name, the Credit Administration Manager here at CLICO Credit Union. I have over 20 years of experience in lending, of which I have about 9 years in leadership, specializing basically in lending, strategy development, risk assessment, portfolio building, as well as policies and product development. All right. So,
thank you so much, Jonathan. Gabrielle.
Hi, Nikolai. Thanks for that lovely welcome. Good afternoon, panelists and everyone. So my name is Gabrielle Simon. I'm currently a member of the CLICO Youth Arm. I'm also a SBCS student in ACCA, and I'm currently the president of Trinidad and Tobago Youth Advocacy.
Thanks so much, Gabrielle. And Samisha.
Good evening, everyone. I'm Samisha Maharaj, a 20-year-old student at the University of the West Indies, studying banking and finance and political science. I serve as the Guild Faculty of Social Sciences representative, as well as the founder of the UE Entrepreneurial Society. I've had the privilege to serve at the National Youth Parliament 2025, as well as the Women's Parliament 2026. I'm involved in several research papers in AI, governance, and entrepreneurship. Thank you.
So as you can see, we have a panel of quality and expertise in their fields of study, as well as in academia, in co-curricular, in national development. And we're going to dive right in. And you may be looking at us and wondering, well, why is credit important? But to understand why credit and building your credit is important as a young person, we need to understand what credit is. And who else answered that question? I'm going to pass it over to Jonathan to hit us off with that first question. So, Jonathan.
Oh, yeah, that's a great question. So credit basically is a contractual arrangement between a borrower and a lender, where it is you would exchange funds for whatever purpose. and that exchange of funds, well, not an exchange of funds, sorry, where you would lend funds for whatever purpose, and for probably a period, whether it's a long term or short term, to repay either in terms or probably in a lump sum, of course, with interest. And credit involves anything like credit cards. You would have mortgages, vehicles, or consumer loans. If you want to get a little more granular and technical, it have things like overdraft facilities, line of credit items, and of course commercial financing, demand loans, bridging loans, and things like that. Right. So anything that is used, and of course we do have with more recent times we have fintechs and also money lenders and stuff. Those unofficial forms of lending. But basically, credit is it's really where you would be able to lend and then repay with interest. Right?
Yeah, so quite a comprehensive answer of what credit is. And I think as young people, myself included, sometimes there's a misconception that credit is a bad thing, that we don't need to borrow. But that leads me into my second question to you as well. What is a misconception that is really known in this environment that young people, that you would wish young people knew? What is one misconception you think that is out there that you want to clear up?
I think well, there are a couple I could tell you. One of those would be that many times, and this is from experience, persons think that credit is for the purpose of funding like lifestyle and inflationary expenses, right? And by that, what I mean, things like probably to travel every year, right? And I'm not saying that travel is wrong. It's just as if it is you are funding an expense that on a regular basis, right, through a long term or even a medium term financing option, right, it may not necessarily be one of the best decisions. Another misconception is that, as you mentioned earlier, a person think that borrowing is a bad thing, right? But really and truly, borrowing, if managed well, could help you advance a lot of your objectives, all right? And things that you want to achieve, and say, for instance, acquiring a home, purchasing a vehicle, funding education, starting a business, or even financing business operations.
Yeah, definitely some important points you pointed out there in terms of the misconception. Gabrielle, as a young person here, was that one of your misconceptions that Jonathan shared on, or do you have one that he didn't touch on?
Well, for me, I mean, yes, I believed in the misconception borrowing. If done well, it could actually help you. So, as a young person, I was very happy to take my first loan. It was towards education, and paying it off was the best thing ever. I managed it well. I didn't have to, let's say, skip the next month, that type of thing. So, leaning into that as well, one mistake that this taught me is that just because I was earning more money as a selling John, it doesn't mean that my spending should increase. Yeah.
Definitely. That aspect of earning more and not spending more. Really hot topic. Samisha, what about you?
So I would also say that I did have this misconception as a youth growing up that's from the time I take a loan, that's bad, and you should stay away from loans. But I think more as I grew from personal experiences as well as my education, I would say that that's definitely not the case, and I would have to disagree with it. And I think loans are very necessary when building credit score as a young individual.
Yeah, and you touched on an important topic there, credit score. We'll circle back to that. But Jonathan, in your expertise, this is your area of expertise. How early do you think somebody should begin building their credit, and why is it important to start earlier as you progress throughout your life?
Right. So to be honest, from the time on, and so when it comes to borrowing or lending, lenders usually have a set of factors that they use to assess risk, right, or a lender, right? One of those factors coming from the Caesar credit would be the person's character, all right? And your character basically, your integrity, your financial integrity, how it is you have paid loans before, right? If it is you do have any existing loans, but the thing about it, if we need, as a lender, you need to know who you're borrowing, right? We all know of KYC, know your customer,
yeah.
right? And in the case of the credit union, KYM, know your member. But in order to know that person must have some form of history, right? So it's important, right, to start as early as possible. And this is like, when it is you get into the work environment, right? Some institutions would, give you like a small credit card, right? At the credit union, we would look at, savings, or at least, a small loan where we take, a portion or the majority of it and put it on shares, right? We structure that, right? And it would allow you an opportunity to at least build some sort of a relationship. Because if it is I'm entering into a relationship with, and this is for those persons who are in relationships, right? If you're into a relationship and you want to get married, you want to be able to know the person that you're getting married. So you have that process of courtship,
Yes.
right? And so I see lending, especially for those loans like mortgages and vehicles, as the marriage part of the lending relationship. But taking like a small credit card and small loans, right, is the courtship part, where it is like, okay, well, I get to know you, I get to understand, okay, well, what is your commitment to repayment and things like that, right? So it's important in that sense to start, all right, a relationship, a credit relationship or borrowing relationship at that age.
Yeah. So definitely having that transitionary period, if I could say, put it in that way, starting off small and allowing the financial institution, in this case, the credit union, to see that you're able to handle this line of credit. And then when you'd like to purchase or have a bigger line of credit, we're able to say, okay, well, Nikolai has been with the credit union for a long time. He's able to service his debt on time in a good manner. So let's be able to let him get these types of services.
That's correct.
Yeah. Gabriel, you want to add
Agreed.
something?
Yeah, agreed. And I think for many young persons, the credit union is a great starting point. Because it's member based, it gives us more help. It builds a stronger relationship. And over time, you could easily get that character loan, as John was saying, because they know you as a member and they take their time to help you build your healthy financial status.
Yeah, definitely. What are some habits that can immediately help someone improve their financial profile in your area of expertise?
Yeah, that's a good question, and when I say good question, in the sense that, especially for young persons and even young professionals who are currently on the webinar, I think that being able to at least establish, have a stable source of income, all right, being able to at least have a good budget, right? Many times persons come to us to borrow, and they don't necessarily have a budget. They don't really have a plan of action as to how it is they want to be able to repay, how they intend to not just repay the facility, but also cover their other expenses, right? One of the things that we look at when we are assessing loans is a person's capacity to repay, right? And your capacity really hinges on your cash flow, right? Your income, job stability, right? So therefore, it's important that you at least try to, set yourself up, even as, and this is even before you choose your career, right? To establish yourself in through your studies, and even a career where okay, here's what my job is a little stable here. You understand, a lot, very stable. At least I'm qualified, right? So therefore, in the event that there's any sort of economic shock, right, or a shock to the labor in the industry that I'm working in, at least I'm marketable, that I could afford to gain employment and still be able to service whatever facility I'm accessing and cover my regular expense and still have something to save.
Yeah, for sure. So, Misha, anything you'd like to add to that, or you think he covered everything? All right. And along the same line of conversation, while we want persons to improve their financial profile, what is the biggest, or what are some causes rather that cause damage to a person's credit score? Samisha hinted to that line of conversation. Credit score is important. What is the credit score, and what are the causes that damage the credit score?
Right. So credit score are basically a set of metrics that a financial institution would use to be able to score a borrower's viability for lending, right? And different institutions have different scores and even weightings, right? But some of the factors that are considered there would, of course, as I mentioned, we would look at the person's job stability, the sector that they're working in. All right, we would look at also their borrowing pattern, how frequent they borrow, right? Their past repayment history on loans with the financial institution, even with other financial institutions. We would look at the method of repayment. All right. There's also the person's marketability in terms of employment and the ability to gain employment in the event, as I mentioned before, in the event that there's a shock, right, to the industry that they're employed with. And basically those factors coming together helps us to be able to assess how viable the applicant is for a facility, how much they are viable for, and then how to structure that facility. If it is we want to give that facility for a period of 2 years, 3 years, 4 years, 5 years, or if it is we want payments to be made either on a monthly basis, a fortnightly basis, a biannual or quarterly basis, right? Those are some of the things that we look at when it comes to risk assessment, and it's important, for a person to establish a good credit score by way of even their lifestyle choices and decisions. All right. So, for instance, if it is a person is going to now we use credit bureau reports. All right, credit bureau reports, through TransUnion, which will give us an idea as to what debts they have, how they have repaid those debts, and things like that. Some of them they come with generic scores. Some of them we would build them into our into our scores that will help us to be able to come up with a figure. Now, with regards to those credit reports, what we often look at is how it is the applicant is able to manage their existing debts, the future debts that they have, right, or at least the proposed debt that they're going to have, as well as cover their regular expenses. And I think what would help would be ensuring that you pay your loan on time or pay your credit cards on time. It will help to ensure that even if it is you are in a bit of a pickle, you could even reach out to the institution just to find out, okay, well, here's what could you do, and that kind of thing, right? Another thing would be to look at how frequent you go to request for financing, because every time you go to an institution to borrow, they will do a credit check on you, right? And sometimes that in itself, the more you approach an institution, now what happens is that if one institution A may do a credit check, they may not grant you the facility for whatever reason. You may go to B, C, and D, right? And all of these institutions deny you that facility. What tends to happen is that in itself, the more frequent requests that you make could impact your credit score as well, right? Changing jobs, frequently changing jobs, right? Or even changing your address. Some of those things could also impact your credit score.
Some really important points there to unpack, because I have to say I never heard it in that respect before. I didn't realize that even changing jobs would impact your credit score. I mean, I was aware that financial institutions would typically do the credit check and look and see what's going on. But that's some really great stuff that Gabrielle, anything you would like to add there? Or
No, but as you say, I didn't realize it was that deep. It is very insightful.
Yeah.
Changing jobs and address. Yeah, that's something to note for sure.
Yeah. So definitely we have Jonathan here to give us that financial expertise. He's been in the industry for over 20 years. So Jonathan, we're definitely going to come back to you for technical questions. But I want to flip the script a little bit and delve into the young professional side of things. And we're going to start off with Gabrielle. We want to talk a little bit about developing a healthy financial habit as a young person. And we could probably start with what financial mistake, Gabrielle? What financial mistake gave you or taught you the biggest lesson?
So, Nikolai, this is very funny, but I think a lot of young persons like myself also make this mistake. You're fresh out of school, you get your first big girl job, and because you're making a decent salary, you could spend lavish. I deserve it. Celebrate my self-culture, So, because I fall into the culture of spending more while I was making more, I realized that my expenses increasing because my salary increased, but I wasn't really getting ahead. So it really taught me to be much more intentional. So now every time before I make a purchase, I ask myself, is this of value? Is this impulsive? Do I really need this? So that the decisions that I make today, because of my good salary starting up, would not affect me tomorrow. And I think that is very important for a lot of young persons to build on.
Yeah, for sure. I relate to that religiously, but we don't want to get into that.
Yeah.
So Misha, how about you? Same question.
I would also agree with her and say my financial mistake is that my spending was not matching the amount I was earning, unfortunately. And as she said, you get the first big girl job. We're girls. We like stuff. And sometimes I would go to Pennywise and then I would say, yeah, I need this, I need this. And then my income would say, you don't need that. Don't need that. So yes, definitely spending more than you earn is an issue that's Gabrielle as well as I and most youths make a lot.
Yeah, and you touch on something. Do I need that? Remember in primary school, you do wants and needs. You did a column, and we laughed about it back then. But now, sometimes you have to bust out that little book and wants and needs. Do I want this? Do I really need this? But I think for me, I remember when I got my first credit card. Well, your boy thinking nice. I got a credit card and I'm earning miles to it because I like to travel. So you want to swipe the credit card for everything, not realizing credit card is due every month. And when you miss the deadline date to repay, that's interest being added on. So I remember the shock of my life going in to repay my credit card for that month and realizing, oh, wait, I didn't spend this amount because the interest was added on. Pro tip, if you have a credit card, please repay on time. Go to your financial institution, find out what is the date, that period of time, and repay on time, right? Um, but Gabrielle, what financial habits really changed the way or impacted the way in your financial aspect of your life? What would you say?
So for me, it was awareness. When you see the money leave your account and you see how much remain, awareness. So the biggest habit for me was being intentional. So when I started being intentional with my money instead of wondering at the end of the month, where did everything go? That changed the game for me. So I started setting aside a little bit on savings, even if it wasn't large, just so that I would save something each month. And I think that's what everybody needs to do, be consistent with it. Track your spending over time. Sometimes you buy something really expensive and you think, okay, one big purchase you overspend on. But sometimes it's the little daily habits that add up, add up, add up. And I feel like once you're aware of these things, it's much easier to make that decision instead of feeling like you have to sacrifice everything. Consistency, consistency, consistency.
Jonathan, anything you want to add to that point?
Yeah, I agree with that. I mean, I as well, in I got my first pay. It was the same thing, I would have found myself in that trap, just spending, because, you want to be able to enjoy the niceties of life, if I may say. But the reality is that it's very important, especially as young persons, for us to be able to set aside something in savings, all right, to be able to put a budget in place, all right, to be able to establish, okay, here's what, and that budget must align to what your short-term, medium-term, and long-term objectives are, all right, and one of your long-term objectives obviously would be in a mortgage or probably obtaining your own home, right, and that is something that for those of us who, those of you who already have a home, you would understand the cost, not just to acquire, but also to maintain a home, right? So, those are things that sometimes when in our young ages, we don't really pay close attention to, so, it's really good. And I'm really hoping that, these words and what we're sharing now really hits, home for some of you viewers so that you would be able to apply it. And even if it is you have, gotten, a lot older, there's still room. There's still room.
Yeah, for sure. Because as a young professional myself and someone who is now at a stage in their life where you're looking to purchase a home, it really ties back into understanding, okay, is the financial institution, is the credit union or the bank, are they gonna grant me that mortgage when they look at, my history, my financial history? But yeah, definitely really valuable there. How would young people balance enjoying your life currently as well as preparing for your future, preparing uh family life, buying a property, building your own home, traveling? I'm gonna hit Gabrielle with this question because I hope it's okay. But Gabrielle recently got engaged. So
Yesterday.
oh wow! Well,
Congratulations.
congratulations there. You see. So, Gabrielle, I think based on your experience now, because we've gone from single to married, so managing your finances while enjoying your youth,
Right.
enjoying the opportunities that present themselves, but also now understanding that you are building a household with your husband.
Yeah.
And how do you plan for your future, Gabby?
So, thank you, Nikolai, for that excellent question. And for me, and what is working for our family, I would say is not having to choose over one or the other, but planning for them instead of paying for them later. We value travel, we value entertainment, so we would include this in our budget. Every year you look at your finances, this is what is important to me, and I include it instead of feeling like, no, I have to say no, I have to sacrifice. So I learned that financial discipline isn't saying no to everything, but simply including it in your budget so that the choices that you make could allow you to enjoy your life. Yeah, that's some adulting, real adulting
That's
there.
real adulting there. Samisha, how about you? What do you think?
I would also agree with Gabriel with this and how to balance it. I would say an important thing to understand too is not everything that you would want is a need. So I think it's a very important to differentiate between a want and a need. And only when that differentiation is made, then you should be able to move forward with what it is that you really need, as opposed to what is something you like or something you want.
Yeah, I think like you rightfully said, budgeting for it.
Yes.
On a personal note, I you have to know yourself. You have to know the type of lifestyle you have. But there's a little saying we like to say in Trinidad, don't hang your hat where you can't reach. And I think it's so applicable because sometimes our expenses they add up. And you know what was the biggest shocker for me? I could tell you this. When mommy is telling you, well, I'll pack food for you, but we're saying, no, 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 I don't want no fridge food. And we want to buy food every day. And let me tell you something, that adds up because you're thinking, okay, I'll spend $30 to buy a nice box of food today. But then at the end of the week, you're like, it mightn't hurt that much. But at the end of the month now, you realize you spent like $400 in food when mommy or the hubby or the wifey cooking every day for you, but you don't want to eat the food. So that was a big eye opener for me. But I want to ask a very hard hitting question here. What do you think someone should do with their first salary? And we're gonna go to every person on the panel to answer this one because I'm very intrigued. So I'll start with Jonathan, and then we'll make our way down.
Um, so what I would suggest, i- and this is even before you obtain a salary, that you establish firstly what are your long term, medium, and short term objectives, all right, and based on that you set a plan of action as to, okay, how am I going to achieve those things. And from that, you would then be able to look at your income or your expected income, right? Because of course you will sign a contract prior to starting the job. So you would want to establish, okay, well, all right, how am I going to achieve this, or how am I going to? What are my expected expenses? I will have to consider things like travel. because I have to travel to and from work, probably get some uniforms, cover additional expenses associated with getting to and from work. So I think for me, one of the core focuses would be on how am I going to budget those funds, right? So I think it will be to establish a budget and then be able to utilize the funds in accordance with the budget and stick to it. Gabriel mentioned consistency. All right, I think that's also key in that sense. Yeah.
Definitely. Wow.
Agreed.
Definitely. Gabby?
Agreed. For me, I think that your first salary is your first opportunity to start building good habits. So let's say living at home, contribute to your household. You just leveled up, do a new certificate, do things that would actually add value to your life, and then whatever remains after, enjoy a portion from that. Because of course you deserve it, you deserve to celebrate, but start with a good habit so it's easier to continue. Don't start off bad. Yeah, learn from our mistakes. Nice.
For sure. Samisha.
So I do agree with John and Gabrielle with this, but one thing I would like to add is that when you get your first salary or generally any lump sum of money, it's always important to save and invest. And now saving and investing is not the same, even though people may think it's the same, it is not the same. It is very important to invest. And investing doesn't need to start with a whole large amounts of money. It can start off small. It can start off with $300. You can start investing. And with institutions such as CLICO Credit Union, you can start saving and you can start investing your money, which will pay you more in the future than it would now. So my advice is to start saving and start investing.
For sure. Jonathan, I'm going to pass this over to you real quickly. What is the difference between a credit union and a financial institution, say like a bank? Because I know many young persons out here would say, well, the credit union is the same thing as the bank. They may offer similar services, financial services, but there is a difference. And we want to make that distinction to our viewing and listening audience. So,
yeah, thanks for the question, Nikolai. Sorry, Samisha. Right? Yeah, so the difference is that with a bank, you are and other lending institutions, you are a customer, you are a borrower, right? You don't really have a say in terms of the leadership and the governance of the organization, but as a credit union member, you are, well, precisely as I said, a member, where you now form part of the governance structure in the sense that you now have a vote, right, or a say in terms of who leads the organization, right? You have part ownership of the organization as well by way of shares, right, which you then receive returns via dividends once the organization generates a profit. All right.
Thank you. So, a very important distinction for young persons looking on, and of course, we know we at the on the youth arm level, we want to ensure that that spirit of credit unionism is alive because. Many times we would have started off. I could speak for myself. I don't know if Gabby and Samisha could touch it, but I remember in primary school when there was junior cooperative, and you have your little book, and you're giving your little $5 or your $1, and they're keeping track. But definitely, it's so important to understand the distinction, what the bank would offer as opposed to the credit union. And I think I have to put in a little plug for the credit union. Speaking as someone who is a member of the CLICO Credit Union, I have to say it's a community, it's a family that you come into, I would say. They look at your need, they don't see you as a customer, but they are looking at how they could assist you. And my time of joining and becoming a member of the CLICO Credit Union, I can say that anytime I would have to conduct a financial transaction, the staff, they're impeccable, they cater to your needs, they're really tailored and honed in on how we could assist you, and they go above and beyond. So really want to encourage you, if you're not part of the credit union, we're going to share that link, and it's available on the credit union's website to join, and we want to have you as part of the credit union youth arm as well, because we have so many initiatives like this one where we're going to help you and give you that financial advice. but definitely a great discussion we're having so far. And I just want to shout out some of our viewers that we have joining us live on Facebook as well as on YouTube. So we have Lovell Mendez on YouTube. Thank you so much for joining us. We have Natasha Carrington, Janelle Mendoza, who they are on Facebook and they're contributing with their comments. So we want to invite you as well. We're not even halfway through our webinar. We have so much other great topics to touch on. So share the link. Share the live, invite persons on. We want to hear from you. Keep the questions coming. Our executive, they're here in the background. They're capturing the questions. And we're having such a great time right here in our very first webinar. So please share the live, share the link, invite your friends, invite your brothers, your sisters, your cousins, invite everybody on. We're having a good time right here. But we're going to dive right back in to our questions. And we want to talk a little bit about building wealth and financial independence. Samisha, I'm going to jump to you now. What do you think, or why should young persons, young adults, young professionals, why should they invest early?
So, my answer to this question is simply time. Time is the single biggest advantage that a young investor has. So, compound rewards years spent in market far less than the large amounts of money placed later on in life. Starting early means smaller, more manageable contributions, which can grow into significant funds by retirement. And it gives you a little room to recover from the mistakes or from market dips as the economy fluctuates, and it builds the habit of investing before major expenses like a mortgage or before a marriage, before children arrive. And it can help your money to outpace the inflation instead of losing value sitting idle. So in short, I would just say that young adults who invest early can, trade smaller amounts of money for a large amount of freedom later on.
That word, freedom. Wow. Financial freedom. It's something that we take for granted at times. But definitely that Samisha's entrepreneurship study is coming out there. But Jonathan, in your professional capacity, why do you think young persons should invest early on in their life?
Yeah. So the thing about is that, as Samisha indicated, time is something that will come and go. You understand? You can't really go back to the past. I mean, you can look at it and learn from it, right? But you can't go back and change anything. So I think for me, that's one of the key factors in the sense that. If it is you by investing and saving, right, you are basically setting aside some wealth. And I mean, I have a saying that, we don't just live here for ourselves, but we live for those to come, right? And that concept comes from, if it is you are looking to start a family, you would have children and grandchildren and great grandchildren and things like that, right? And some of them may never meet you, especially those great grands. But if it is you can establish something that creates a legacy that they could always that they could now be a part of, right, at some point in time, and enjoy, right, the fruits of your labor, so that they don't have to be in a financial crunch, right? It helps out. So I think it's extremely important, right, to start saving and investing, right, at a young age.
Yeah, I definitely, you see that term you use, that building generational wealth, that is so important, because I think sometimes we look at, okay, I want to have kids, but we don't look further. And sometimes it's often said that you want to set your generation up, like you rightfully said, they may not meet you, but you would have put them in a place where they can have that financial freedom that Samisha was hinting at. I just want to jump into a question that we got here from YouTube as it relates to the credit union, to the prior question that we would have had. So the question is, how exactly do you have a say in leadership given you are not working in the establishment? So this question is on from the YouTube live. So Jonathan, I believe that she's asking that, as you mentioned, you're a member of the credit union and you're part of the governance. So if you want to clarify and take that question for us.
Yeah. So what happens is that when you become a member, right, you are a shareholder, right? You have shares in the organization, right? And just as any organization, you must have some form of leadership, right? So you have leadership not just on a managerial level, but also leadership on a governance level, which would be our board of directors, right? And as a credit union, you would have not just a board of directors, you have a supervisory committee, you also have a credit committee, right? Each role and function do have responsibilities that are directly related to the operations as well as the sustainability of the organization. You would want to ensure that at least, but as in any organization, you want to ensure that you have competent persons that could lead the organization, those various roles and portfolios. So being a member, right, affords you the opportunity, just as if it is you are going to vote a politician into power, right? You have that opportunity to vote and to elect someone who, or persons, or group of persons that will be capable to function and to lead the organization and manage the organization's resources in that regard.
Yeah, so Dev, I hope we would have answered that question for you in terms of how it works and be having that say in the credit union. Why we say you're a member, you're a shareholder in the credit union society. We also have I guess, Jonathan, we have another question for you here. We have Alicia Bruce, who is asking to hear about the different investment opportunities. So I guess we can talk about shares and the average percentage of dividend over the last few years, if you'd like, Jonathan.
Oh, sure. Yeah, thanks for the question. So, yeah, so our main investment, which is shares, right, and I will focus on that simply because of the fact that that's the capital of the organization, and even your capital as a shareholder. We have so with shares, your shares first begin is what it is we use to lend to other members, right? Who would access loans. Those loans are repaid with interest. That interest is what we use to accumulate to cover our overhead expenses. And coming on to the good part, our surplus or profit is what we distribute in dividends towards the members. Over the past couple of years, we would have paid like about 4.5%. Right, well, which is really, really good given the economic climate that we're in right now. And I think with exception recently, we would have paid about 4.25%. Right. So yes. So we have that. We do have our deposit account as well. That generates at least about 2% per annum.
Yeah, definitely. So I'm glad that you asked. So feel free to keep the questions coming in. Just a little segue, as you mentioned, investment. I want to jump to Samisha right now. Samisha, you do entrepreneurial studies, right? What are some investment opportunities that exist currently here in Trinidad and Tobago? Because as Jonathan rightfully touched on, there's a lot of talk out there in terms of the financial climate, the economy right now. So in the course of your studies, what do you think are some investments available here within the country?
So I would say that there's a real range of options available locally. So firstly, I would say that there are corporations that offers mutual funds that covers income funds, growth, and the retirement focused funds, as well as the US dollar denominated funds. So, for example, the Trinidad and Tobago Stock Exchange lists shares and bonds in established local and regional companies. Then we have the government treasury bills and bonds, which offer lower risk fixed income. Then we have credit union shares and deposits, such as CLICO Credit Union, who pay dividends and supports member-owned groups. Then we have real estates, whether it's property rental or land, but it remains as a long-standing option. And increasingly, entrepreneurship and small business ownership is in its own form of investing in yourself and in your community. But the right mix depends on your goals, your timeline, and how much risk you are comfortable taking.
That's it there. How much risk are you comfortable taking? That's so true. Gabrielle, a question from the viewers to you. How young of an age would you say would you be comfortable in starting investing, in your advice? How young should someone be to start investing?
I think I can't really give an age, but whatever age it is you get your first job at, starts. Your first is always the best starting point. Your first everything, the first study months, the first everything. So let's say it's 18, start saving one time. I would say start as soon as you get
Yeah.
your first job. Yes.
Yeah. Another question. We're gonna throw it over to Jonathan. What is the youngest age allowed to join a credit union? Now, I wanted to take the question, but why take the question? We have the actual credit manager here because there are certain provisions in place for persons who are before the age of 18. There are facilities in place, but Jonathan will explain to us.
Yeah, just to clarify, you were asking what age could the youngest age for someone to become a member of the
Remember,
credit union?
yeah.
Right, someone can become a member of the credit union as long as they have their birth certificate. All right. So from the time you come out of the womb, you could become a member of the credit union. All right. There's no age restriction in that regard. Well, of course, we will have your parent or guardian that would, sign up and be more or less, the guardian of that account, conducting the necessary transactions and things like that. When it comes to accessing loans, however, you won't be able to access any loans until you're of the legal age to borrow, which would be age 18.
Yeah. Thank you so much. So, Gabriel, as a young person, a young professional, you are now entering into a new season of your life in terms of being married, So, but how has your financial journey evolved compared to when you would have come out of a tertiary level education, even whilst in tertiary level education, to also getting your first, as you said, big girl job, to now as being married? How has your journey evolved?
So for me, it has involved from wanting to just earn more money and climb the ladder, but now managing my funds. Because no matter how much you make, you're going to want to spend more. So for me, it has evolved with control. I started planning ahead, I started saving consistently, a fixed deposit, and I consider every decision when it comes to spending. I used to be a real impulsive buyer. I feel sad, buy this, buy that. No, I think about my decisions now because I realized at the end of the month, this is adding up. So being intentional was my game changer.
Yeah, that is so true. Samisha?
I would also have to say to agree with Gabrielle when she said to be intentional. I think that's the most important thing to take away for right now. Just be intentional about your spending.
And Jonathan?
Yeah, I agree. The intentionality is very important. Sometimes we may not feel to. All right, but if it is, we do understand the purpose behind certain decisions and certain actions. It helps us to really, be driven to do what we have to do. It may not always feel good, but we have to be intentional.
Yeah, I think for me, what I do is I keep track of my spending on a Google Sheet, actually. So I have a Google Sheet on my phone, and I've set up the formulas. So I have everything, the recurrent spending for every month. So, loan payment, credit card payments, how much I want to save, pay for this, for that, the other. So I have that set, and then I have my salary and my earnings. And then I put a portion of that budget for any kind of spending, going out, like and I'll be truthful to you, as I always oversee that portion. Every time I'm thinking, yeah, I'm gonna stick this month. Somehow or the other, I'm exceeding. So I'm working on it though. I'm getting there because the amount is reduced. But definitely, it is something that when our parents told us sit down budget, they weren't just saying that is coming from their wisdom, their experience. And now I think as young professionals, as we enter the working environment, as the economy is diversified, as jobs become more available, different types of jobs, it's so important to ensure that you set up yourself financially to live a very good life and have that financial freedom that the panel is talking about. Before we dive back into the questions, we have a question online, and this question is from YouTube, and it's a question asking, could you invest for your children? And I mean, the short answer is yes, you can. But John will tell us about the facilities that we have.
Um, uh, well, right. So what we have predominantly would be shares. So it's good, and I'll probably let Misha delve a little more in terms of other investment options. But at the credit union, what we do have would be shares. We have deposits. We do have fixed deposits as well. But predominantly we have the share account. Yeah.
Yeah. So, Misha, you want to jump in here?
So, this generally revolves around investing, but I know you particularly asked for your children, but it applies the same. So, the biggest myth that we have about investing is that you need thousands of dollars to begin with. That is simply not true anymore. So, locally, we have corporations that allows you to buy units for as little as $20 each, which means you can start with whatever you can afford. So another step that you can do to invest is to automate it. So what you can do is that you can set up a standing instruction to move a fixed amount, even if it's $100 or $200 a month, into an investment or into your credit union share the moment you get paid. So this is the pay yourself first approach. And another thing I would add to is that consistency matters more than any size of the amounts. So invest in a small amount every single month can smooth out your average cost over time.
Yeah, I think nothing to add there. You know, the consistency part is so true. I think myself included, we would often think that we need $1,000 a month or more than that to invest and to save. I think for me, the distinction came when I thought saving was investing. I really did. And until I realized, and somebody told me, no, you're saving the money, but you can get that money to work for you, right? So definitely, Jonathan, what are the different types of credits and borrowing in terms that CLICO offers? We're seeing this question come up a lot. So would you want to tell the viewers?
Yes, thanks for that question. Right, so we do have regular consumer loans. Our flagship loan, which is called the Anything Loan, covers basically anything. All right, and that's a facility that we could run for up to 10 years or $650,000. Presently, we do have a campaign that is running where you could get access that Anything Loan for as little as 10% on shares. That 10%, if you don't have those funds, we could provide it from the proceeds for you. Right. Of course, there are terms and conditions that would apply, and of course, subject to risk assessments and evaluations and things like that. We also do have vehicle loans, both brand and new vehicle loans. Our vehicle loans currently could run up to 10 years, depending on the age of the vehicle. If it's a brand new vehicle, we could run it for a period of 10 years, with as little as 5% on shares. And in some cases, we do have a promotion. You never know. We may even have little to nothing on shares for that. We do offer mortgages as well, and soon to come, we would have what we call a bridging facility or interim construction loan that would be able to finance the construction of your home before actually paying a mortgage. All right, and then we do have some other products that are on the way. Some of our products we do tailor specifically to certain sectors and segments in society, right? So that we would be able to meet our members because at their point of need, all right? And so those are basically some of the products that we have, but we do have some that are in train as well because we're looking to get a little deeper into the SME lending space, right? Because we do know there are a lot of young entrepreneurs that are coming up, so we can look out for that coming up soon.
Yeah, definitely. And I really want to say that the CLICO Credit Union, they offer a wide range of services, and you can get information on all the services on the CLICO Credit Union website. There are all the downloadable forms. Everything is easy and accessible. But if you need to speak to someone, if you need to speak to a customer service rep, you can always feel free to visit us here at Port of Spain, Edward Street branch, or there's a Piaco branch as well, right? Or you could call the number, and I'm sure we'll have a rep that'll be able to answer all the questions. But of course, we want to get you involved and connected to the credit union. We want to see how we can assist you. So definitely go to the website, log on, see what facilities we have and what is applicable to you. But become a member. Become a member, and you'll get emails on everything that we offer. We do have something called the Business Hub. If you're a business owner, starting, or if you're an entrepreneur, it's a unique environment tailored for business owners where businesses can come share their services in a society of other business owners and also have access to the credit union, the CLICO credit union as well. And more often or not, what the credit union is doing is we look at our business hub members to put when we need services provided as well. So this is a plug if you're a young person who's now starting off in the business space. Become a member, and also join the business hub. You will not regret it. Um, I don't work for CLICO, y'all. But I can speak. I can speak for these services because I have been impacted in terms of the financial aspect of my life, and I could say for every young person, we're not gatekeeping here. We want to share as much knowledge as we can to have you be financially free, right? We know the questions are coming in the live stream and on the YouTube chat and the Facebook Live. So keep those questions coming in. I tell you, we have a hardworking team behind the scenes. You may not see them, but the questions are coming fast and furious here, and we keeping track of all the questions, and we will address each question. I'm telling you, right? But just to jump back into our little discussion we were having, I want to ask the panel, how has being a CLICO credit union member, how has that been beneficial to you? Samisha, I'm gonna start with you.
So I would say that membership means being an owner rather than simply a customer. So the value that the institution creates comes back to the members through dividends and loans instead of just going to outside shareholders. In practice, that means more access to affordable credits, a savings vehicle that grows alongside an institution, a genuine voice in how the credit union is run. And for the younger members, resources such as Nikolai mentioned, business supports, entrepreneurship programs, and that are hard to find elsewhere.
Yeah, Gabrielle.
For me, it helped me start saving consistently and think beyond just day-to-day spending, but actually planning and building financial authority. So because I'm a member, they would sit with me and go through, is this product right for me? Is it wrong? Like, not my expertise, but theirs. They would lead me in the best financial way, and I love that. Yeah.
Jonathan?
So what I would say is that for me, it has given me an opportunity as a professional in lending and finance to be exposed to persons who are looking for to advance their career or advance some of their life objectives, right? And I now have an opportunity to impart what I've learned over the 20 plus years of being in the credit union environment to be able to impart that on those persons, right? So for me, there's a greater fulfillment that comes out of not just being a member but also being an employee, right, of the organization. So yeah, that's it for me.
Yeah, I would definitely say being a member of the CLICO Credit Union has helped me in terms of access to facilities that are not really offered outside by other financial institutions. First, I'm a big advocate for qualifying oneself in terms of your education. And I really have to say that being able to sit and chat with the CSRs on the different options that are available where the education, well, we don't call it education loan, right? But in my little lingo, the education loan, how to pursue and further my studies, and having somebody really sit there, like Gabrielle said, and look at what your plan for your life is and say, okay, I see your plan. But have you looked at this? We could add this on. We could take this track. I'm not looking at you as a customer, but looking at you with your best interest in mind, right? I think that's so important. I just want to jump into a question here that we have on the Facebook Live. I'll ask Jonathan to take it, and then Samisha or Gabrielle, you could jump in afterwards. And the question is that, what advice would you give to young entrepreneurs whose businesses are not registered, but they want to be financially stable using a loan facility, but their business is not registered? To Jonathan.
Yeah, that's a very good question, and thanks for that. What I would say is, if you're not registered, it's good to register. So at least you have a name, right? Whether it's a trade name or if it's a limited liability, at least you have an entity or an enterprise that could be represented by its name itself, so that when you go out to market, right, it's not just yourself, but it's also, it's this organization. Apart from that, it's important to establish a record of your earnings as well as your expenses, and not to look at your earnings as funds that you could just take, and draw from the business and utilize for personal expenses. It's very important to separate your personal expenses from the business expenses. If you don't know, within the laws of Trinidad and Tobago, there's a thing they call commingling when it comes to businesses, and you don't want to mix your personal affairs or your personal expenses with business expenses. So it's very important to establish, okay, well, here's what I'm going into a business, right? Or I have a business. I want to be able to establish what is my income, what is my expenses, and at least push and ensure that you could generate a profit from it. Pay yourself from the business, because you don't want to draw every cent from the business, and ensure that whatever profit remains in the business, if you take a portion of that to distribute as as a dividend to yourself, or if it is you have more than one director, you could have dividends, but not all of the funds. Keep some funds, retain some funds, so that you could afford to cover any future expenses, capital expenses, and things like that, right? Or any shocks.
Yeah, definitely. We spoke about paying yourself from that business, and that commingling. A lot of people are not aware of the commingling aspect in terms of the laws that we have governing that. Tamisha, I see you wanted to add something, so you can jump right in.
Yes, so as John would have mentioned about to register your business, it's very important to register. There's a term that a lot of local peoples like to use, that they have a small business. No business is ever small. The first step you should do is to register your business. So with being an entrepreneur, is one of the most powerful wealth building tools available, but only when it is paired with financial discipline. So from day one, separate your separate finances. So separate it from your personal and your business finances. Mixing them is the fastest way to lose track of whether a business is actually profitable. So you can simply build a plan before you launch. So your startup cost, your monthly overhead, and the point to which the business breaks even. And then you need to reinvest these early profits into the business before taking large personal draws, so the business can build its own strength. And lastly, you can take advantage of local support, such as the CLICO Credit Union Business Hub. This can help you to turn your ideas into sustainable, well-run businesses, because a good idea only becomes wealth when it is paired with a financial plan behind it.
Wow. Clock that right there, right? That is it. That's it right there. I can't really say anything after that. She said it all there. But I'm glad we're having this discussion, because a lot of these things are not really ventilated to the young professionals we have throughout the country. And I want to encourage the young persons online, and you're on the live stream, even the older adults who are here and looking on to share the live and get those young people on. Because I'm not trying to bribe anybody, but we have two prizes to give away. Actually, we have 4 prizes to give away. My mistake. We have 4 prizes to give away. And we want to share with you all. So let's see. I see we have a gift card. I'm not going to disclose what gift card, but we have a gift card here. We have 2 gift cards. And the team is going to let me know how we're going to get this prize out. But let's see. They're telling me for our most interactive viewer. All right, so let's see. If you could be the most interactive viewer, you have a chance to win a voucher, a gift card. So let's see. Get in those. Get in that comment and ask the questions. And I'm seeing. Oh, the comments are lighting up here. I should not have said that. But we definitely have some prizes we want to give to you, our valued viewers, and for taking the time this evening to join with us. Question to the panel before we jump back into the questions that we're getting on the live stream, and we will be sure to try and answer as many questions as we can with our time given this evening. What does financial freedom actually mean? We've been hearing the term a lot this evening. We hear the term circulated in the public domain, but what does that really mean? Gabrielle?
So I mean, when it comes to freedom, you think, okay, I can do whatever I want. But no, I think is having choices, being able to make decisions based on where you're at financially. So not about having everything you want, but not being controlled by what you owe. Let's say you stay home from work today, it doesn't control you. Let's say you lose your job next month, you know? So I think when you could handle unexpected pressures of life or expenses without panic, that is what financial freedom is. Taking advantage as things come, you want to travel, you could go ahead rather than making decisions based on the pressures of life.
Yeah, very, very good information there. Samisha?
I agree. I would also add that, financial freedom involves a lot of flexibility. So it doesn't require you to have extravagant wealth. It means your money simply covers your needs and goals without financial stress. So you can absorb an emergency without a panic, and you have the flexibility to make life decisions, as Gabriel would have mentioned, a career change, further study, starting a business. It's based on it's based on what you want rather than only what you need. So, financial freedom is a personal target, it's not a fixed number, and it can build gradually through the financial habits that we covered today.
Yeah, that's so true. Jonathan?
I agree totally with both perspectives because at the end of the day, what you're really looking at, the word freedom, right, speaks of the ability to not have to be able to do something under under pressure. But if it is you have good money habits, right, have a good budget, right, you and you're budgeting for things that aren't necessarily your wants, right, you're looking at your needs, right, as a priority, and with some savings and investments, right, that would allow you the financial flexibility, right, to absorb shocks, right, as well as to be able to cover some of those ad hoc expenses that may come, and even to achieve some of your goals, right. So I think it's being able to not be in a bind or in a position where it is okay, where you're living month to month, right, on a paycheck, or you're more or less living month to month. You're not only living month to month, but you're also borrowing, right, to be able to cover some of your recurring expenses, which is also a debt trap in itself.
Yeah,
Right?
yeah. Yeah, definitely. I think for me, I growing up, I remember my mom always says that take 20% of your salary and put it into a rainy day fund. I try to do it. I'm not gonna lie to you. I mean, sometimes you have some, as you say, ad hoc expenses coming up that that you really didn't see coming. Um, I mean, I can tell you something that threw me off this month. I got wrecked in while parking in Port of Spain, and for any person who has ever been wrecked in Port of Spain, it's an experience I hope you never encounter. But there is a finance you have to pay to get your car back from the police. It was an expense I did not budget for. I mean, it's not at such an exorbitant expense, but it's still an unplanned expense, right? So I think having a rainy day fund, I think, is something that we sleep on sometimes because life happens. We really don't plan for things and they just creep up, whether it be a health emergency, whether it be you are unemployed just like that, changes in the economy and affecting things that happen to your life. So definitely having a rainy day fund, having savings to be that leg you can stand on when things don't really go as planned, right? So jumping back into some of our questions from our viewers here, I want to think that the person is referring to investing, but the question is, what is considered a bad investor? Is there such a thing? So I'm not sure if she's talking about bad investor or bad investing, but we could do it either way. Jonathan.
Right. So if I would want to speak more about a bad investment. All right.
Yes.
So a bad investment would be investing in probably the latest Jordans. All right. If it is you can't afford it, all right, and you have other priority expenses, a bad investment would be you could afford a vehicle that is probably worth about $100,000, right, which does the same thing as compared to looking to purchase a more expensive vehicle because you're under a little peer pressure that your colleagues or friends also do have a luxurious vehicle, that may be a bad investment because of the depreciating nature in itself of the asset. All right, as opposed to a good investment would be investing into your own business, probably shares and equity into on the stock market, also into your own property. So for me, I hope that does answer the question. Yeah.
Yeah, I think it covers it. And we also have a question here. How do you join the business hub? Well, it's really simple. Really, really simple. I'm going to tell it now. I'm not going to gatekeep this. But basically, you go onto the CLICO Credit Union website. There is a tab that says join the business hub, and the website is, but I'll give it to you, businesshub.clicocu.com/register. So we will have our admin put it in the chat that you can get it, and we'll paste the link there. But definitely do not sleep on this opportunity. Join the business hub, get connected with other business owners, get connected with other companies, and let's all have that really great community that we can all share and learn from each other. Right. So y'all, we have 3 more prizes to give away. So here's what I'm thinking. I want to make it interesting now. So you all talked on 3 different aspects of building your credit. So I'm gonna ask each one of you to develop one particular question on the topic that you would have spoken on to ask our viewing audience, and then our great team will look at the comments to see who's the first person to answer, and we'll choose a winner, and then we'll share how they can receive their prize. So we're gonna do that in about 10 minutes, and I'll give you all some time to think of the question, and then we'll go to that. I think when we sit here and we talk about building your credit as a young professional, I think that there needs to be more forums like these to really speak to young people on how they can build their credit, because credit is not often a thing that is discussed in the wider society, and it's only when you reach to a point of having to, like I say, go and take a loan, purchase a vehicle, further your educational studies, or maybe you want to take a family trip, because that is the reality of where we are as a society. It's only then that we're looking to ask these pertinent questions. Some persons are not aware of how to effectively manage a credit card, right? And this is not on our list of questions, but I want to throw it out to the panel, and I think Jonathan could lead with his response. Is that a bad thing?
No, that is not a bad thing. Debts actually do help us to achieve short, medium, long-term goals. Mostly, I suggest that it's used for medium to long-term objectives, and those will be things like, as I mentioned before, obtaining a home, investing in education, investing in a business. Even if it is you want to start a business as well. Those will be good things that debts would actually support. What tends to be a problem is if it is you are borrowing, as I mentioned before, to cover recurring expenses, right? Cover or to repay arrears on your bills. TNTech come in, you need a 1,500, you go to the credit union, you go elsewhere, you probably use your credit card to borrow that 1,500 so that you could pay off that bill, and you still haven't learned your lessons yet, right? You find yourself back in the same trap, and a lot of that really comes back down to budgeting, right? So I think once it's managed well, debts could give you help you to accomplish a lot in your life.
Yeah.
Yeah,
Well,
I think that, as Jonathan rightly said, that should work for you, not control you. So at the end of it, assess every decision. Am I borrowing to get the latest Jordans? Am I borrowing to invest in my education, to start a business? So it really comes down to assessing the need and then letting the debt work for you, not control you, and then you catch it in your skin every month to pay it off. So
Yeah.
assess it rightly.
Samisha.
Yes, I do agree with both John and Gabriel. And what I would just like to add is that you should borrow for things that grow in value or grow your income, not for things that lose value the moment that you buy them. So, as Gabriel would have said, Don't take a debt for the latest Jordans. Take it for something that can improve you as a person or improve your income as a business.
Yeah, I think sometimes as young people we get a little caught up with that what's the term, impulse buying. You know, we see something we wanted, like Gabriel's mentioned before. You know, you're feeling a little bit sad today, so you're gonna need to swipe the card and you make a purchase. And you're not thinking about, you know, future goals, future purchases, but definitely look at investing. I realize investing has come up a lot in our discussion, in the comments, in the questions. So definitely there are so many ways to invest. Samisha highlighted some, but definitely if you're looking at investing, you can definitely visit CLICO Credit Union. And we want to put in a plug right now to join the CLICO Credit Union Youth Arm. We have a very good youth arm here at the credit union. I am the chairman. Gabrielle is a member. Samisha is not a member yet, but she'll be joining after this session. We have a great team of executives. We have a great group of young people, and they all share that similar value where we want to get persons to a point of understanding their finances, understanding financial freedom, understanding the purpose, the role of the credit union here, and how the credit union could help you as a young person. So we want to invite every young person, every young adult, every young professional that is on the live stream here to come and join the CLICO Credit Union Youth Arm. We're going to have the admins post the instructions in the chat on how you can join, and we want to see applications coming in, and we want to onboard each and every single one of you, because we do have a number of initiatives that are coming up. We have one of the credit union's flagship events, the Youthpreneurship, that happens in October, where we meet together. It's a very big conference, and we have businesses, we have young people, we have youth advocates, we have the government, the private sector, the business sector. We all meet together to discuss how youth can get involved in that financial aspect of their lives and society. So definitely want to invite everybody, join the CLICO Credit Union Youth Arm. We would love to have you, and we have so many opportunities here for you to partner with us and to offer to you. I can tell you we have a number of partnerships with corporate Trinidad and Tobago that we offer exclusively the CLICO Credit Union Youth Arm. So please join. We would love to have you. So we're jumping back in. So I asked you all to have your questions ready. So I'm seeing that everybody is ready, and we're going to ask the audience to pay attention, and maybe we can have the admin type out the question and pin it so that they can be aware. All right, so Jonathan, we're going to start with you. What is your question to the live audience?
Yeah, so Nikolai, I decided to make it very easy, because credit is a heavy topic. So I really hope it is easy. All right, so that'll be, why is it important to have a good credit score?
So I hope you all were paying attention, you know, because he touched on it, he gave you the answer, Gabriel gave an answer, Samisha gave. So why is it important to have a good credit score? I can't answer, so don't worry. All right, so we're gonna let that simmer into the comment section. Oh, how are we gonna do this? We're gonna do with the first comment wins. That's how you're gonna do it, team. Yeah. All right, first comment. Let's see what's going on here.
Sensible comment.
Yeah, that is it. That's correct. Okay, let me put a disclaimer there. You have to answer the question correctly. So you have to be the first correct answer, touching on and answering the question exactly, right? All right. Gabrielle, your question to the viewing audience.
So my question doesn't particularly have a correct answer, but it must be a sensible answer. So my question is, if you got an unexpected $5,000 tomorrow, what would you do with it first? Would you save it first? Would you pay off debt first? Or would you invest it or spend first? And why?
All right.
Yeah.
That's a very interesting question. I like the aspect we're going into here now.
So let's go again, right? Just to make sure everybody heard.
Yes.
If you got an unexpected $5,000 tomorrow, what would you do with it first? Would you save it first, spend it first, invest it first, or pay off debt first? And why?
And why?
Yes.
Make sure you put in the why. We
The
want to
why.
know.
Yes.
And Samisha, what do you have for them?
I have a simple question. It's not only for entrepreneurs, anyone can answer, but it's a question on entrepreneurs. So, should an entrepreneur use the reinvestment funds to purchase the latest iPhone? If you agree, state why. And if you don't agree, what should they do instead? I'll ask back the question in case you didn't catch it. So, should an entrepreneur use their reinvestment funds to purchase the latest iPhone? If yes, state why. And if you don't agree, what should they do instead?
All right. So 3 great questions from our panelists. And just to put a disclaimer out there, we will not be announcing the winners live via the live stream. So what we will do is we will have a member of the Youth Arm exec reach out to the winners, right? So it would likely be our public relations officer to reach out to you and inform you of your winnings and how you can collect your prize. And so no need to worry. We're not going to put your username or your name out there. If you want to remain incognito, we definitely want to respect your privacy. So don't be afraid to answer and we'll have somebody reach out to you. All right. So have we gotten any answers for the first question? Have we? Yes? No? Yes? We got one. All right. The team is still looking back. All right. Yeah? We're hearing that we have one on YouTube. All right. Yeah, we'll get back to that. Okay. We have the comment section busy. Everybody's trying to win these prizes. I think we were getting some questions on investment funds. Jonathan, you want to touch anything where the investment funds aside? Yeah, we want to give that to Samisha. Yeah, we could give that to Samisha. Samisha, we were getting some questions on investment funds and whatnot. You want to touch on that for persons who are looking to invest? Yeah.
So again, I would say that investing starts with small amounts. So as I said earlier, you don't need thousands of dollars to begin investing. You can simply start with $100 or $200 a month. And as Gabrielle would have stressed tonight, and I completely agree, consistency. Consistency matters more than any size of the amounts. So I think that starting is more important than the starting amounts. So, and you do not have to wait. I realize that a lot of people tend to say, month end, we'll do this. Or when the new month starts, we'll do this. Or even next year. Start today. If not today, start tomorrow. But definitely start as soon as possible. And you can start with the lowest amount because, as I would have mentioned earlier, you can start with up to $20 in investing in certain corporations.
Yeah. Anything you want to add to that, Abby? Yeah.
She explained everything perfect, and I agree. I second that.
Yeah. So we've been talking a lot about what we should do, what is best practice, so to speak, right? And but I want to ask you all, what are some practical daily or even practical habits that young professionals can develop in terms of building their credit, in terms of saving, investing? We've been talking a lot on what should be done and what is ideal, but given the reality of young professionals where they're at in their lives right now, what are some practical things that they can do or practical habits they can build? Gabby, yeah?
So if I had to choose just one and very actionable, you could start today, I would say start tracking your spending. Before you try to save more or make more money, start to understand where your money is actually going. Take it week by week. Everything you purchase, write it down. How much money you spend on gas, your subscriptions, your shopping, your recurring, as Nikolai rightly said. So I think that once you're aware of your spending habits, then you're in a much better position to make decisions intentionally. And awareness creates accountability. And when you have accountability, it creates better financial habits. Start tracking today.
Yeah, excellent. Jonathan, anything you'd like to add to that?
Yeah. So I think that just as Gabriel said, sorry, it is to look at what are your key expenses, all right, and you establish a budget, and then understanding that whatever you're spending funds on, you want to spend on things that you really need as a priority. Right, are your wants? Of course, there may be some things that you would want to consider, but it's just to be able to put some perspective on some in terms of prioritizing what is important at the point in time. I think also for young persons, we do like to enjoy some of the niceties in life. But it's really being honest, as Gabriel indicated, being honest with yourself. Okay, is this something that I should pursue at the point in time, or is this, or as Samisha would have indicated earlier, is this something that is going to help me generate wealth? Is this something that is going to help me, advance my career or anything I'm doing? Right. Always look at what you are, utilizing your funds for. I think what is also important is being able to make sure that you could cover all of your your expenses, write it out. You have things like, okay, if you want to give a contribution to the household, right? If you're still living with your parents, you make a contribution to the household. That helps you to build a sense of responsibility, right, and commitment. Of course, you save, invest, put aside some money, for recreation, and with that, you don't want to overspend. Right? I think Nikolai had mentioned earlier on, right? Overspending, because that is something that tends to kind of create problems for you. So for me, those are some of the tips that I have, that are practical. Not living above your means. It's very easy to allow the emotions to run wild, especially when it is you are amongst your peers, and you see what they have, and their circumstances may be different. But if it is that you're making 5,000 and they're making 10,000 a month, right? Understand that with that 5,000, there's only so much you can do. So you don't want to try to live like a 10,000 income earner, right? You live like 5,000, right? But you could put things in place so that you could afford to earn 10,000. So the focus should be more on, okay, well, it shouldn't be on how could I look like 10,000 income, right? But how could I what could I do to invest in myself or in something that I can now start earning 10,000 income, right? And even with that, you want to be responsible as well.
Yeah, some really good stuff that we tapped into. Samisha, you want to add something there?
Yeah, so I would like to build on John's points of income streams, and I would always recommend building multiple income streams. So relying on one income is risky, especially in an uncertain economy.
Wow.
So the active income is what you earn from your job or a side hustle, but passive incomes include things like rental income, interest, or dividends. So you can start with one additional stream at a time. So you're probably wondering how. You can reinvest the early profits rather than spending them immediately. You can start your own business and become an entrepreneur on the side of your normal job. So, in local terms, we like to use it to, like, if you make a good bread, they say, but you can make bread and sell. You can. You literally can. And you can start a side hustle and build multiple income streams. Because multiple income streams do two things at once. They can reduce your risk if one stream slows down, and it can speed up how quickly you build wealth.
That is so very true. That's some really good advice. We are so glad that we have our panel here this evening with really excellent advice, tips on how you can build your credit as a young professional. I think this is some really great stuff that we've been chatting about and not frequently talked about. We have been getting in some answers from the Facebook Live. Let's see what we're getting in here. All right. So I believe this question, I think this is for Gabby's question, but I'm gonna read this. It's for yes, no, sorry, it's Samisha's question. Question number 3. All right, so Samisha, to your question, we have an answer, right? Well, we have some answers. So this person said, firstly, I would invest to build income. Secondly, save for emergency purpose, and lastly, keep a small amount for spending purposes. I would highly like to decide. I'd highly like to decide to clear a debt, considering the amount. All right, all right. All right. Let's see. Jonathan, why is your question? We have some answers here, and one of his answer is to build a relationship with your credit union. I mean, it all right. Yeah, it's a safe answer. Another one, she said to get a loan easily. Okay. All right. So keep the answers coming. We definitely want to hear some answers from you all. You can comment on the YouTube Live, on the Facebook Live, and we will announce the winner. I believe we have the feedback form in which we're choosing being able to contact persons. So definitely want to invite you, after the live stream has ended, there will be a feedback form. We want to encourage everybody to please take a couple. It's very short. Just input the information. We want to be able to connect with you. We want to be able to connect you to the youth arm, to the wider credit union, and to give you access to us for all our upcoming initiatives as a youth arm executive, because we definitely believe that we're going to get all of the young people involved in the youth arm executive. All right. So we're winding down, coming to the end of our webinar, our very first webinar here on the youth arm executive. So I have us a signature question for each of our panelists, and I'm going to start with Samisha, and then we could probably go down the line, ask any question to give you a little time to think of your answer and then come back to us, right? So Samisha, my question for you is, where do you hope your financial decisions today will have you in 10 years? Right? So I'm going to give you some time to think about it, and then we'll come back. Gabrielle, for you, what's one financial habit everyone can start this week without spending $1? Yeah. And then, Jonathan, for you, I'm going to ask you, if every young person watching tonight remembered just one thing about credit, what would you want it to be? Yeah? All right. So while our panelists think, they ponder and get their answers ready for us.
But are we getting prizes?
No, well, I'll have to check with management on that one. You kind of put me in an awkward position there. I'll have to call the manager and find out. All right. I'm looking through the live. Do we have any more comments? Any more questions? If we could have some questions coming in, we have some time again before we wrap up our first webinar. If you have any questions that you would like to ask the panelists, please feel free to comment in the chat, in the live stream. We would love to answer. We would love to connect with you. We have the question our panelists asked to you, all the viewers. We would love to hear some of your responses, because we do have some prizes that we would love to give out to you rather. So keep those questions coming. So team, are you all ready with some of the the answer to your question? Yeah, you all ready? All right, Jonathan, you look most ready. I see you put down the pen, so I think I'm gonna go with you first.
Yeah, thanks. So for me, what I think, there are a lot of things that we can learn, all right, from this. But for me, one of the key takeaways is really that whatever it is you're borrowing for, right, it should be something that would help to generate some form of wealth for yourself, whether it's immediate or at least long term, right? It should be some wealth. And as we had indicated earlier on, one of those things would be investing in a business, property, right? Or even in equities or shares and things like that, right? So for me, and the reason why I'm saying that is because from my experience, right? Many times persons don't think of that, and Gabrielle would also agree with that, because of the fact that you never know what the future holds, right? And Samisha indicated a while ago that you don't want to depend on one source of income. It's no longer viable. In this day and age where expenses are increasing and there's inflation and all these different things, the cost of living is increasing, right? It's always good to have, you know, that additional source of income. One of the ways you could do that is by if you borrow, you borrow in a way that it would be able to generate some form of wealth, if not now, but at least sometime in the future. So yeah.
Yeah, definitely. Fish, agree with that answer. Gabrielle?
So, one financial habit everyone can start this week without spending a dollar is to stop comparing your finances to other people's lives on social media.
Whoa.
And I think John would have lead into this, but we live in a time where we are constantly seeing people traveling. They're going to restaurants every day. They are living their best lives. But honestly, we don't see the loans they're taking, the sacrifices, the financial challenges behind the scenes. So I think one of the quickest ways to make poor decisions is by trying to keep up. Stop studying other people's lifestyles and focus on yourself. Comparison steals joy. So if your goal is to save for a home, invest in your future, you want to get a degree, that is okay. Not everything you see on social media is real. And my challenge right now is to stop comparing and start planning. Plan for your future, plan for your house, plan for your car. We want to build something that is financially sustainable, and it starts now.
Yeah, that. I think that's such a that she hit the nail on the head with that. Yeah. But I definitely have to agree with Gabrielle because I really want to encourage young professionals, especially. Let me tell you something. A lot of these influencers that we see out here, I guarantee that they signed a brand deal with these companies, so they are not paying what you would pay for certain things. So please don't allow social media to get you caught or trapped up into thinking that this is a lifestyle that you would have. These are things that are negotiated beforehand. You know, it's marketing, right? I mean, so please be mindful, use your wisdom, be very informative and inquisitive in when you're doing and planning your lifestyle. Trust and believe. You don't need to be driving a Mercedes Benz because somebody else is driving one, but definitely you want to be smart and not get caught up with social media because social media, like everything, too much of a good thing is not a good thing, right? So we want to encourage you to be very smart with your financial habits. Samisha, to your question.
Right. So my question was, how does the financial decisions that I make today can assist me in 10 years? So a question I always ask myself is, how does the decision I make today affect the world tomorrow? So as John would have mentioned earlier, when we live life, we don't only live lives for ourselves. We live for the future generations, for children, for grandchildren, even great-grandchildren. So it's important to start saving for emergency funds and investing for growth. It's also important to understand that the decisions you make today can affect your children, especially when it comes to debts. So while all debt are not bad debt, they are still bad debts. And putting yourself in a situation where you are in a lot of bad debt, it can affect your children if it is a situation where you are no longer able to work to pay off it as bad debt. So a decision I would try to make now is to advocate to have a business for entrepreneurship. So it's always safe to have a business, even though there is a lot of risk, is less risk than losing a job and remaining with zero forms of income, as whereas you can have one with your business. So I would also agree with Gabrielle when she said, don't live beyond your means in an attempt to impress anyone. So as they both would have mentioned, yes, people's lives can look flashy, it can look nice, and you might think, I also want to live that life. I want to impress this person. I want the latest Jordans, the latest iPhones. I want to look the best, but it's also important to always identify your wants and needs, which I cannot stress on enough, your wants and needs. I have a problem with wants and needs, so I feel like that's why I stress so much on it. Not everything you see you can have, and it's important to identify that from young and to start investing from young. Because if you start investing at the age of 25, the fund that you will accumulate at 60 will not be the same as if you start investing at 35. So it's important to, of course, gain your knowledge on the investing and then invest. Thank you.
Wow. Such a wealth of information from all our three panelists. Really good stuff and information that we have shared with our live audience. But I'm gonna flip the script. I'm gonna put the panelists in a different chair. Panelists, is there a question you would like to ask me? And I'll give you all, yeah, Gabriel said yes. Yeah, I think Gabriel came planning this, But I'm here. I'm gonna take it. I'm gonna take a question for the team. Don't make it too hard, And while they are doing that, we are getting ready to wrap up in a little bit, and we want to invite you again to please fill out the feedback form to the end of the live stream, as well as there will be a form to join the CLICO Credit Union Youth Arm. Please, please, please. It's very short. I think it's less than 2 minutes you will take to fill out both questionnaires. So please join, share the link. We want to connect with you. All right, panelists. I'm here. I'm ready. All right. So Samisha says she has a question for me. Samisha, very easy, right? Take it easy on the moderator.
So the question that I have, and I believe also it was asked earlier on in the YouTube chat, is that what exactly are the opportunities that the CLICO Credit Union has for youths and for young people?
Well, that I could answer. So the CLICO Credit Union Youth Arm, we are a subcommittee of the wider credit union. We have so many opportunities. Oh my goodness, this is such a loaded question. But definitely the opportunities that present themselves to the membership of the CLICO Credit Youth Arm are enormous. They are tremendous. The CLICO Credit Union has a number of partnerships and MOUs with other institutions here in corporate Trinidad and Tobago, educational, other financial institutions. We have many partnerships. What being a member of the Youth Arm does for you, it gives you access to these selective services, partnerships that we have, and you can get first access at specialized programs, access services that will not be accessible to just a regular person outside of the Youth Arm executive. On top of that, we have the financial advocacy training that we offer. The Youth Arm executive, we have our team of executives are well competent, well qualified, trained in the ways of the credit union to be able to teach the Youth Arm executive on our financial services, on the financial credit that we offer. So there are so many opportunities. We have opportunities like this for information, webinars. We have the youthpreneurship. So we have a plethora of opportunities, of services, of events that the Youth Arm hosts and does, and we also want to pass that on to you, the membership. So join. All right, Gabrielle.
So, Nikolai, if you could leave our audience with one piece of advice that you wish someone gave you when you were younger, what would it be?
All right, one piece of advice. I would say definitely to save more. Growing up, I often would hear, yeah, you need to save. And it might sound cliche, but I'll tell you why in a bit. Saving is so important. Saving for a rainy day is so important. I could tell you that being a young man now who has begun the part of your life where I'm looking to purchase a home, I'm looking to get married, I think saving more would have brought me to a place where I would have had that disposable income and not really have to require the services of a loan or a mortgage just as yet. Saving is so important. I think if I started to save earlier, the disposable income I would have had at this point in time, I could have invested a bit more and not taken certain decisions But I want to say that experience, wisdom, growing through my financial decisions has brought me to this point. So if I can leave you with one advice, save. It's never too late to start saving. It's never too late to start investing. I take real pride now as a young man, especially having multiple streams of income. Like Samisha said, investing in different areas of your financial life. Save. Whether it's $5, whether it's $15, the amount doesn't matter. Like everybody on the panel said, consistency. And having disposable income readily available is really important, because then you can use as collateral. You can use that to make a down payment for something. But definitely when you get to the part of your life where you're looking to make those, as we say, adulting decisions, right? Getting married, starting a family, purchasing your first home, you want to have that disposable income. So save.
Lovely. Very insightful, and thank you for being honest with us.
You're welcome.
So my question to you, Nikolai, is in relation to the youthpreneurship program that is scheduled for October. Tell us what we could expect.
Definitely. So we have many surprises. So I wouldn't give everything out of the bag, but definitely. So it's a flagship event of the CLICO Credit Union. So definitely the youthpreneurship. It's not a conference. It's not a one-day seminar. It's a youthpreneurship, because we want to tap into the spirit of youth as well as entrepreneurship, like Samisha was always touching on throughout the entire panel discussion. So what you can expect, we have panel discussions throughout the entire day. We have exhibitors that come in. We have the entirety of corporate Trinidad and Tobago. We have companies, we have businesses. We have our partners in the educational society, our partners who we have MOUs signed with, and they all come in to exhibit what they offer. You can register and become a member of the credit union on the day. You can become a member of the Youth Arm Executive on the day. But definitely it's an environment where you can network. It's really important to us to create that environment where young people can connect to other young people and network together to build their financial knowledge and to get that financial freedom. So what you can expect is lots of panel discussions, lots of giveaways, and a chance to be able to speak with all these companies and get access to certain deals and whatnot in terms of what they're offering, and networking. Just to touch on something outside of the financial talk that we're talking right now, as a young person, as a young professional, it's so important to network when you come to these events. It's so important to build that database of persons who you can contact for different things. Networking really is important. Yeah, thank you for that question. All right, so we have some answers right before we go. We have the most interactive person, and that winner is she has the handle Lovell Mendez 2207, and that's on YouTube. So the person who has Lovell Mendez 2207, that handle, you have won one of our gift cards. So congratulations to you. Thank you for being engaging with us, and we want to invite you to come and visit us at our Edward Street office here in Port of Spain at the CLICO Credit Union to collect your prize. Of course, work with your valid identification. And the office is open from 7:30 a.m. to 3 p.m. So we want to invite you, but we will try to make contact with you. So a member of the admin team will try to reach out to you to get your information off the live stream, of course. So thank you so much. And in the answer to Jonathan's question, the question you asked, the only answer we got is to get a loan easily. And she has also been engaging. That is Natasha Carrington. So we leave it up to you to discuss. We can look through. It have other answers. Oh, okay. No problem. So what we will do is the team The team will meet afterwards and we will sift through the comments and we will choose the best comment out of the answers. So this is why it's important to fill out the feedback form. So we will know who you are and get in contact with you to be able to reach you to get your prize. All righty. So ladies and gentlemen, we have reached that time of the webinar where we must say goodbye. We must say thank you for joining us. It was such a wonderful session. Right before we go, Jonathan, Gabrielle, Tamisha, one last bit of advice, 20 seconds to our viewing audience. Jonathan, let's go.
Wow. Well, what I would say is that when it comes to so first to begin, that's not a bad thing, right? If it is, it's used wisely, right? And of course, you honor your commitment. You make sure your budget so that you can afford to cover your monthly commitments towards those debt. That's one of the strong advice that I would have for young professionals. Save and invest.
All right, Gabrielle.
Your first time doing anything is always a good opportunity to start. Start small. Don't wait on the perfect salary, the perfect opportunity. Just start. Start saving now.
All right, and Tamisha.
I will just try to briefly say wealth is not built through one big decision. It is built through small, consistent habits practiced over time. So save with purpose, invest early, even in small amounts, and build more than one income streams. Thank you.
That was excellent. Thank you all. So, young people, young professionals, ladies and gentlemen, thank you so much for being a part of our webinar, Building Your Credit as a Young Professional. It is the first of many initiatives hosted by the CLICO Credit Union Youth Arm. We are so thankful, we are so grateful that you logged on, that you registered. I believe we had over 185 persons logging on throughout the entire webinar. We want to say thank you. Thank you for spending your afternoon with us. Thank you for bringing us in to give you that advice. And we want to invite you to connect with us. We want to partner with you. So there is a feedback form that will be available immediately after the live stream ends. Please take some time, fill that out. There will be a form available to join the CLICO Credit Union Youth Arm. Fill it out. We want to invest with young people. And I want to say on behalf of the entire Youth Arm executive, on behalf of the wider CLICO Credit Union, thank you so much for taking the time to be with us. Thank you to our panelists. Thank you to Jonathan, Gabrielle, and Tamisha for lending your expertise, your knowledge, and sharing with the wider viewing and listening public all the little tidbits that you wish you had. Ladies and gentlemen, thank you so much. I've been your moderator and chairman of the CLICO Credit Union Youth Arm, Nikolai Rampasad, and we're saying good evening for now. Bye-bye.